Good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, February the 24th, 2022. Extremely interesting day in the markets today. Extremely interesting day for the world today. We did receive yesterday after our close that Russia did proceed with the invasion of the Ukraine. That sent the global markets in a tailspin. And we saw within our own markets, particularly the NASDAQ, we dropped. And let me just go to, we were already down here. Then we had a slight higher opening, and then came the news, and bam, 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 bam. And it really sailed right through support levels that I was thinking, well, maybe that'll finish our third wave, and then we'll get a little 4, and then we'll get a 5. Well, it didn't. We got all the way down to 13,104, got a little 4 off of that, and then it came sailing down to 13,025. And that is where I've marked the completion of that minute, sub-minute fifth wave, the minute fifth wave, and the minor third wave. So from that level is where we began a minor fourth wave correction. And as you remember from last night, when I was making the update, I was discussing that within that minor fourth wave, that the general guideline rule is that fourth waves will often find their terminus or their endpoint within the price territory of the fourth wave of one lesser degree. Well, one lesser degree from a minor degree is the minute degree. And I had pointed out that this was the limitations. It did it today. It got all the way up there today in one foul swoop from pretty much the opening. This thing just started to sail without stopping. We had 1 hour, again, 1 hour of down market. Now, we've seen this activity before where we get 1 little hour of down market. And the other time I was making reference, we had 1 hour of an up market. Now, 1 hour of down, and then they just literally blasted this thing higher and above 13,900 and just kept on pushing. Massive baskets being bought in the broader market, in the NASDAQ, and in the Russell. And so eventually, the lone holdout to stay lower was the Dow. And it was based on basically Boeing and a few other stocks. Well, the Dow ended up nearly 100. The NASDAQ cash closed up 465. The future began to pull back. And to be honest with you, if I just take a look at so really what was going on, they're already marking things back down. They're already, Apple being marked down. It's offered 3/4 lower than where it closed. AMD actually higher. Then we have AMAT, basically unchanged. Amazon, down, not a lot, but down. The bid, down 12. So we can go down the line and you can see they're already marking things back down. Now, what this can tell us, this fourth wave can be complete at today's high. I'm not going to mark it. I dare not. And we need to continue to, allow additional upside. Our next Fibonacci is the 50%, and that comes in at 14,046. It may get there, and it could do that tonight in our Globex. So again, not really getting a great feel for what these markets intend on doing as in response to a war being started. Excuse me. So again, I'm kind of out there a little bit, having called for the correction, but to see how they went about it today is what surprised me a little bit. The response, I thought, okay, we were oversold. We were very oversold, as were most of those stocks were very oversold. But to see the reaction and what came back was like, wow, okay. So because this reaction is if it was basically almost telling me that that low not going to be touched again. That to me is how they came in and bought this. Kind of similar to how they bought this up. And so like, well, we'll wait, we'll see. Again, here we are 2 days later, coming all the way down and having a 900-point reversal, right? We were down 465 and we ended up 465, 930 points. That's huge. That's huge in my book. The Dow did one better. The Dow was down over 800, ended up nearly 100. Those are huge turnarounds. So let's see what happens. Following the Elliott, the next move would be a minor fifth wave down. And that minor fifth wave down would be expected to take out this low, would be expected to break towards 12,844, would be expected as to complete this whole cycle down below at 12,188. And I'll show you what that represents. That just represents where this whole move will be equal. So in other words, the A wave or the C wave would be equal to the A wave at 12,188. That's a very common level. Now, but if that's what's going to happen, this C wave, this fifth wave is going to be as devastating as this minute fifth wave. Is that possible? Yes, it is. Can it happen? Yes, it can. And what it really does is just totally annihilate and reverse again all the activity from today to reestablish positions, to load things up, would be reversed. Now, tomorrow's an expiration. On the way down yesterday and then overnight, the market dove through strike price, all the way down. When you were seeing how destructive these were, that Tesla finishes at 800. Tesla was quoted below 700 this morning for the opening. So this, you can see, it went through all those different strike prices. And it was quite amazing to watch coming off. Now they've recaptured all of those. So our bigger players, Apple, Amazon, getting back above 3,000. It was trading closer to 28, down below 2,800, and reversed that. We have Google up 100. It was trading below 2,600. It was trading closer to 2,500. So all of those different strike prices, et cetera, coming down the line. Microsoft up $14. It was trading closer to endangering the 275 and the 270 strike price. Got it all the way back. And if we continue this tomorrow, Microsoft will recapture the 300 strike price. Is that what the market wants? I guess it may be. So what can we expect for tomorrow? To be honest with you, I think that we need to trade this as we see it. The Elliott tells me that we still need to allow for an additional about 80 points up to this 50% level. The market, being that it's a minor fourth wave, cannot break above 14,363. That would negate the count. But it certainly can kind of try to get itself up there. And that, again, would be surprising to me, because then it makes this 4 way too big. Now, it's a minor fourth wave. So here's the minor third. So we're already heading towards the starting point for that decline into yesterday's and this morning's lows. That all in one session. It's pretty incredible. So while I can expect a little bit higher, then I would be looking for additional downside in a minor fifth wave down. And that minor fifth wave is going to come very similar to what this third wave was, 5 waves of minute degree. Not as large. I mean, our third wave was over 2,000 points. It was a beautiful third wave. The fourth wave, yeah, one can expect it's going to at least do 38, 40%, maybe 50%. That was quite the sizable decline. So putting it into perspective, with the drop that we took, and that drop started on February the 9th. So coming in 3 weeks, basically, we reach our low, 2,000 point drop, and then we rally back basically 900 points. Pretty impressive, very impressive. So let's see what tomorrow brings. Continue to trade what's in front of you. We're not looking to pick a top. We're definitely not looking to pick a bottom. I am going to continue to say that. That is going to save you a bunch of anxiety. Play what's in front of you. Be open to both sides. If we can just keep our mindset clear of any external noise, and that external noise could be like what's happening in the Ukraine, what's happening with the Fed, what's happening within our own country, what's happening within us, what's happening to our P&Ls, et cetera, et cetera. Nothing can really come in to tell you or derail you from what is taking place right in front of you. These moves were tremendous. Now, I will be honest and say that within those moves, I'm going all the way down to the 5 minute here. Within those moves, you can see it wasn't a straight shot up. It was up, down, up, down, up, up. You know, these were wonderful. And if you caught them, you made a ton. But there were times where we went up, then we came back down. These are 5 minute charts. Then we went up, and then we came back down. Then we went up, and we came down. We went up, 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 and then we came back down, down, down. So it wasn't that tremendously easy. So I don't want to be misleading, and then we're looking at an hourly chart, or you just got long and look what you did. But playing against the moving averages kept you out of hard trouble. And when things really started to break, they had to break. But when things broke above the 5 minute 200, it never even came back to challenge it. That was a first sign. Then it broke above the 50 all the way down here. It didn't even come back to challenge it. That told you that this was going. This was going to go. The 20 got challenged several times during the day right here. But then look what happened. Once that last segment really kicked in at about 2 o'clock, it didn't come back and challenge it. So it was left up to the 4 and the 8. And that is just going to give you very, very, very short term what's going on. But even the 8 guided the trade. Broke it, but took it, broke it, but took it, broke it, but took it back. And they guide the trade. This is what we're going to have to continue to do for tomorrow. Continue to use the moving averages. Continue to use the Fibonacci support and resistance levels. So what was resistance on the way up becomes support on the way down. Now this, they did move it. That was 13,971. They brought it all the way down to 13,892. So they dropped it 80 points into and right after the bell. But there was the bell. Then it just took off. They dropped it. But then they rallied it back up. But then again, right coming into the after hours completion, they dropped it. And they dropped it intentionally. They took it from 47 down to 08 and then brought it back slightly. So again, it's going to be a little bit of a battle, but it's not going to be impossible to trade. So keep your mindset together. We are open to whatever the market wants to give us. And I'm going to be honest with you, because today my mindset got broken where I was trading technically. My mindset is to take the technical picture, and that's what I'm trading with. And then I would slip, and then I became more emotional about my trading. And that's based on the fact that the war, we have one country invading another country, a superpower invading and threatening the United States and NATO. Don't interfere. That was a very clear message. Telling the military of the Ukraine, lay down your weapons and we'll give you access out of the militarization zones. So, and the goal of the invasion is to demilitarize the Ukraine. This is some pretty serious stuff. So I actually decided to stop, pull away from trading, because here we are, rally, and then my emotions are telling me, oh my God, what are you doing? Sold. And that's the mistake. So when you see yourself kind of slipping away from the technical and moving into a different area, pull back from trading. Regain yourself by doing an assessment of your sensations, your emotions, and your thoughts. Get them back into your mindset. Okay, so for tomorrow, play what's in front of you. I'm looking forward. There should be some follow through. We may get it overnight. Now, if that happens and we start to pull back, look for the breaks of the moving averages to give you some confirmation. On our hourly chart, we're sitting just below the hourly 200. If they get it above there and they can get it far enough, it's going to bring some serious acceleration. Look at the daily chart. I'm going to quickly do that before we wind up for today. The 50 and the 200, in fact, the 50 just broke the 200, which really was the negative, and here. But then they just plowed ahead. So the only thing they've managed to get back above and close above is the 4. So the daily gave you the first hint, but it opens things up for a move to the 8 and then a move to the 20. So we have some possibilities here in terms of what the market positioning could look like. I'm not expecting that, but I'll tell you what, if it starts to break and accelerate, I will figure out the count later. I've got to be able to trade what's in front of me, and I will participate. And that's what I'm suggesting and encouraging us all to do. I'm going to leave it there. I'm going to wish everybody a really good trading day tomorrow. And the next update will actually be on Sunday, the 27th.